let's also welcome Mr. Kranthi Bathini, equity strategist at WealthMills Securities. Hello, sir. Good morning. Welcome to the show.
Good morning, Suyash. Thank you for inviting me on your show. It's always my pleasure to share my views with you.
Sure, sir. Sir, I want to begin by asking how the markets in general, the global markets as well as Indian markets are positioned. I mean, the kind of, the inflation in US came softer than expected. In India also, it was softer than expected. Today, we saw a gap up opening of about 100, 150 points or so. Are all the positives that we have seen in the last couple of sessions when the market was on a holiday, have they been priced in?
Yeah, Suyash. The global cues are currently helping the market to try to keep the market on a higher range. But Nifty 19, we are back again, 19,600, we are back again, which was the previous high. So what it shows is, the point I'm trying to emphasize is, there is a strength that is inherent strength is there in Indian market, and uh, Indian market is definitely, it's a buy and dips market. It's showing its resilience. So currently at this point of time, the Indian macros are quite strong. Okay, they are helping the market to sustain above this level, 19,000 level, which helped the market to sustain above this level. Now, what we are witnessing in the market is the global cues, the tailwinds have been helping the market to rise above the strong resistance zone of 19,700. This was the range where earlier the market was struggling. Right now, we need to carefully observe next few days how the market is going to position, whether we could able to climb these strong resistance levels. I can say climbing the wall of worries. That is extremely crucial at this point of time. But definitely, Indian market, the current setup of the market, it's a buy on dip and sell on rally market. Right now, what we are witnessing is it's a broad-based buying interest is coming at this point of time with respect to Indian market. Now, Suyash, we need to take the point also into cognizance. During this last 20 trading sessions, FIIs have been the net sellers. Okay, they have not bought actively in this market. Probably the data shows in the past 30, 40 trading sessions, if you see, they're the net buyers. Despite of these FII sale numbers, okay, what we can see is the Indian market could able to come to the new zone, okay, which was the earlier high. That shows the strength in the Indian markets at this point of time, Suyash.
Sir, talking about FIIs missing on this rally in the Indian markets, I mean, one of the reasons why FIIs have been missing was because the US 10-year bond yields had scaled to a 16-year high. Now, we have come off significantly around 60 basis points or so from that 5% sort of levels. However, we are still relatively, high. So, given that, bond yields are high and fixed income offers attractive returns to the investors, do you expect the markets, at least in the near term, equities to be, the returns to be muted and FIIs to stay on the sidelines?
Some portions here, okay, the hot money is concerned, you're absolutely right, okay. This yield difference will make the going to play in the medium to short. But if you see the long only money, where what we are sensing at this point of time, you're absolutely correct. The bond yields of US Treasury, they were around 22 years high. It went around above the 5% level. And right now, if you see when the inflation data that's cooling in US, that given a strong rally, strong rebounding rally in Dow Jones last night. So what we are witnessing is there is a significant demand for the risk appetite. Money is flowing into equities across the globe, and throughout the globe, the equity markets have rallied. Okay, what we can conceive through this example at this point of time, through this exhibit at this point of time, there is a money that is flowing into the equity market. What does it mean? On a longer note, the company profits are higher when compared to the debt instruments. So the long only money continue to come into equity market at dips, whereas the hot money can be chasing in between these timelines in the medium to short term.
Kranthi, I wanted to keep it with US markets for another question or two. So in early 2023, there was talks about US perhaps slipping into recession. But in the last couple of months, there has been a narrative playing out that perhaps we are heading towards a soft landing. But now UBS has come out with a report, saying that by second quarter, US is going to slip into recession. I mean, what is your opinion on this? Are we heading towards a financial accident, or is US perhaps going to have that soft landing that analysts have been talking about?
Yes, Suyash. It looks very interesting data that comes from US. One thing is clear with the data. I don't want to get into the projections at this point of time, but the existing current data, what it shows is US economy is moving strength to strength. The growth numbers have been quite strong with respect to US numbers are concerned. Whereas the key concern for US at the same point of time is inflation. Right now, given the kind of softness what we are witnessing with respect to the inflation is concerned, what we can sense is how the Federal Reserve is going to play in the next coming Fed meetings. Okay, whether they are going to take a pause or going to take a rate cut, it is the key important thing at this point of time. I don't, what we are seeing from quite a last four quarters have been the news of US getting into recession. Now here, I don't foresee US getting into recession immediately because the numbers have been quite strong. Unemployment data is reducing at this point of time. The economy is showing its resilience. Since it is going to be the election year for US also, I don't think so. US economy is getting into recession immediately. They have a lot of ammunition. They have a lot of ammunition in the sense the financial leverages they have. Most probably they can tend to avoid any sort of those kind of recessionary worries given the kind of the political playout is concerned at this point of time. So I'm not worried with respect to US recession worries are concerned, but how they are going to soft land, how the Fed movement, that is the key concern for US economy, that can create a knee-jerk reaction with respect to the global markets are concerned, Suyash.
Now, Kranthi, what does this mean for India? I mean, our service exports have already been impacted in the results of IT companies. We are seeing that, that lack of demand, especially from the US market. Can you, help us understand what it means for India?
Yeah. One thing is with respect to the IT is concerned, here the large cap ITs have been showing this skittiness, whereas the mid cap IT has been performing well. Now the concern for the large cap ITs is winning the large orders. That is the key concern because the companies are conservative at this point of time. They are not expanding their positions and they are not taking their decisions so rapidly at this point of time. Of course, winning the deals have taking time and execution of the deals also taking time. That's where the lingering effect of US recession worries playing for the large cap ITs are concerned, Suyash. We need to wait and watch at least for next 2 quarters to see how this execution going to take place and how the new deals can be going at a faster pace. But at this point of time, Suyash, okay, it's not a major key concern at this point of time. US economy is quite strong at this point of time, but these lingering worries of recession worries do playing on with respect to the sentiment of the companies and sentiment of the order books are concerned at this point of time.
All right. Kranthi, shifting focus from global markets to Indian markets and especially the primary markets. Ask Auto has listed at a premium of about 9.5% at 309 sort of levels. the listing is pretty much in line with what the market was expecting. So what's your view on Ask Auto? Should one hold the stock for the long term, or perhaps booking profits partially would be your advice?
With respect to the IPOs are concerned, Shreya, okay, what's the majority of the IPOs, what we are witnessing is there is a softening of the stock prices post listing. We are witnessing in majority of the IPOs. With respect to the Ask Automotives is concerned, we need to if the investors are getting a fair amount of gains, okay, there is nothing to concern about with respect to booking profits is concerned, because after any listing, okay, what we are witnessing is after 3-4 trading sessions later, we are witnessing some kind of profit booking invariably coming into the majority of the IPOs are concerned at this point of time. So investors who invested with a medium to or listing gains, they can book profit. But the long-term investors, given the kind of momentum that is emerging with respect to the automotives as a sector, the EVs as a sector, and given the kind of robust IT, the car numbers, sale numbers, what we are witnessing, one can hold on. The long-term investors can hold on to the stock, whereas investors who subscribed for this IPO with for the listing gains, they can book profit at the higher end of the day at this point of time. But the important thing is one need to keep tracking the earnings of the companies. That is extremely crucial, because most of these stocks, the listing companies which are coming into the primary market, the majority of the stocks are disappointing with respect to the earnings are concerned. I'm at by and large, majority of the stocks are concerned. So one can book some profits also at this point of time.
Now, sir, keeping it with the IPO market, I think we are running short of time. So just want to get your quick view on that. The much awaited IPO of Tata Technologies has finally been announced. The IPO will open for subscription on November 22nd. Now, the details of the IPO are not out yet with respect to, what the price would be, what the size of the IPO would be. However, I was reading some reports which suggest that the offer would be a pure offer for sale. Is this something investors should be worried about?
We need to see the final draft, Suyash. Okay, there's nothing to worry. Okay, always Tatas, they do always in the favor of the investors. They try to reward the investors on a longer term perspective. We need to see the final draft at this point of time. Okay, at this point of time, and it's going to be one of the largest IPO with respect to the fundamentals, and also with the size of the IPO is concerned. We need to wait and watch for the final draft is concerned with respect to Tata Technologies is concerned, Suyash.
All right, that's the view from Kranthi Bathini. Sir, always a pleasure talking to you. Appreciate you joining us here on First Take.